Ex-dividend dates, record dates, and payout dates. What are all these dates and what do they even mean? More importantly, do they even matter for dividend investors? In this video, I'll show you why these dates don't matter at all. So if you don't know what these various dates mean, I'll start by explaining them. And if you already do know, then you can skip ahead to the timestamp that I'll put up here on the screen to the real meat and potatoes of the video. So there's really 4 dates that you should know about in regards to dividend payments. The first is the declaration date, which is just the day that the company announces the dividend payment, and on this day they'll also announce the record date and the payout date. So the record date is the date that you must own the shares by in order to receive the dividend. However, the SEC has a T+2 rule, which means that any trades that you make actually take 2 days to completely settle. This means that if you buy shares of a company the day before the record date or on the record date, you won't be the official owner of the shares until the day or 2 after the record date, and so you won't receive that dividend. So this is where the ex-dividend date comes into play. The ex-dividend date is set based on this T+2 rule, and it's usually the trading day immediately before the record date. The ex-dividend date is the first day that the stock is trading X or without the dividend. This means that if you want to receive the current dividend payment, you would have to buy the stock before the ex-dividend date. So if you buy the stock the day before the ex-dividend date, then you would officially own the shares 2 days later due to the T+2 rule, and 2 days later would be the record date. So ultimately, the ex-dividend date and the record date are 2 ways of giving investors the same information, but they have their nuances that is important to understand. And the last date is the payout date or pay date, and this is just what it sounds like. It's the day that the company pays out the dividend. Usually with most brokerages, you'll get the dividend payment on the payout date exactly, but some brokerages vary a little bit. So some will give you the dividend maybe even a day before the payout date or a day or 2 after the payout date, just depending on how they work. And looking now at an example, Johnson & Johnson recently declared a dividend on April 18th, so that would be the declaration date, and this dividend has a record date of May 23rd, meaning you have to be the full owner of the shares on that day to receive the dividend. As such, the ex-dividend date is May 22nd, and since May 22nd is a Monday, the last day you can buy shares and receive the dividend is the previous Friday, which is May 19th. And then the dividend will be paid on June 6th, so that's the payout date, and the amount is $1.19. So now that we know what all these dates mean, do they even matter for dividend investors? Plenty of people are always talking about these stocks that are going ex-dividend this week or this month, or what are the best stocks to buy before their ex-dividend date so you can receive the dividend. But I truly believe that the timing of the ex-dividend date should not factor into your purchase of stock in any way, shape, or form. The most important things that you should consider when investing in a business is the financial health of the company, the strength of the management, the long-term prospects of the business, and the market valuation of the stock versus the intrinsic valuation of the company, just to name a few. If you follow these principles versus the timing of the ex-dividend date, you'll most likely be a lot more successful as a long-term investor. And that's really the key here, is a long-term investor. If you're a long-term investor, does it really matter if you get 1 extra dividend payment over the course of a 10, 20, or even 30-year investment? I personally don't think so. And if you're investing in dividend stocks, it pays to be a long-term investor, since dividends are taxed more efficiently if you own the underlying company for more than 60 days surrounding the payment of the dividend. Rather than looking for companies that are going ex-dividend soon, I think your time would be much better spent determining an attractive price to buy the company at and waiting patiently until the company reaches that price. And this doesn't mean that you have to wait for years to buy a stock if you think it's a great business, but you're just waiting for an attractive price. I often buy companies above what I deem to be a great price because I value being invested for a long time rather than getting the absolute best price. And I would rather just own the company, and if the price goes down, then I can always average down at that lower price and buy more shares at that point in time. My larger point in general is that the ex-dividend date ultimately tells us nothing about the business and the underlying financials of the company, and ultimately we should be using information about the business to determine if we want to buy the stock and when to buy it. So ex-dividend dates and pay dates are certainly exciting events because they mean that you're about to receive dividends from a company, but in terms of making investment decisions, they are quite useless in my opinion, since they really don't tell us as investors anything about the fundamentals of the business, which is what we really need to know in order to make a good investing decision. So let me know if you have any other thoughts about ex-dividend dates or pay dates, or if you have any questions, and I will see you all in the next one.